So we're going to be going over a couple of videos in this playlist, and by the end of this playlist, you'll be able to know what forex trading is, how it works, how you can trade it, and how you can make money from it. You understand all the terms and everything that has to do with forex trading. So, first of all, what is forex trading? Forex trading means foreign exchange. That's the full meaning of forex. Forex, foreign exchange. And it's the exchange of one currency for another. And it is also the largest financial market in the world. I think forex is the largest financial market. I think then the stock market, then crypto, and then the other ones that are below that. So basically, what it means by the exchange of one currency for another is basically that's the meaning of trading one currency for another. So forex, when you go to a foreign country, let's say you have the United States dollar, and you go to a country like Japan where they use Japanese yen, and you want to exchange your dollars for yen. When you exchange your dollars for yen, that is basically you engaging in forex. That is basically you engaging in foreign exchange. Now, approximately 6.6 trillion worth of forex transactions take place daily, which is an average of $250 billion per hour. Now, because forex is the largest financial market in the world, there's a huge room here to make a lot of money, as much money as you want. The money that you can make on the amount of money you can make on forex is basically unlimited. It's based on your skills. So the more skillful you are, the more money you can make. The less skillful you are, the less money you can make. Now, the forex market is open for 24 hours a day for 5 days a week, Monday to Friday, and is closed for the weekends. Now, unlike some certain markets like the stock market or crypto, the forex market is open for only 5 days a week. Crypto is open every single day, Monday to Sunday, every single day, right? While on the forex market, during the weekends, the market is closed. So if you come to the market, to the forex market on a Saturday, on a Sunday, you basically see no movement. You can't even place a trade because the market simply pauses on Friday nights and opens on Monday. But it doesn't really open exactly on Monday. I think it opens about some hours before Monday. So it's basically Sunday coming into Monday. That's when the forex market opens. Now, how do we make money in forex? Your job as a forex trader is to try to predict which direction the price of the currency pair will go. Now, if your prediction is accurate, you will earn money, and if it is not, you will lose money. So basically, forex is a game of prediction. Now, take note: forex is not gambling. It is not betting. It's not like a casino, and it's not like betting for a sport where you just make random guesses and stuff like that. Forex deals with calculated predictions, calculated predictions with risk management and all those other stuff, right? So just to note, forex is not gambling, and it's not like betting. It's simply different. Now, how do we make money in forex? If you buy a currency, and that means that you're predicting that the market is going to go up, and if you sell a currency, it means you're predicting that the market is going to go down. The more the prediction goes in your favor, the more money you make, and vice versa. So basically, if you buy a currency and the market continues to go up and up and up, and you haven't closed that trade, the more money you make, right? So if the market keeps going up, let's say you put $100 and the market goes up to $200. If it goes higher, it will go to $300, $400, and above. Right? Same thing if you sell. So that's basically how forex is. Now, who trades forex? Central banks, and retail traders. The central banks are usually called big banks, and then we have commercial banks and other banks. We have hedge funds, and then we have retail traders, which are people like me and you, right, who are on the retail level, who trade with our little account sizes on our laptops and desktops and mobile phones. While central banks are the ones that control the large sums of money, the billions and trillions of dollars that you see per day on that stat that I revealed earlier on the first slide. So they're the ones that control that. The banks below that are just the mini banks. Those ones are just, they also trade in large sums, but not as big as the central banks. Now, advantages of trading forex. There are a couple of advantages I listed for here. And the first one is a low barrier for entry. Mainly, anybody can start trading forex wherever you are, whenever you want. And you know, the barrier for entry is very low. That some brokers, you can start an account with as low as $10. Even some go as low as $5. I think I've even seen some go as low as $1, right? But this was not so before. I think in the early 2000s or 90s, when forex was still around, then you can't a normal retail trader can't trade forex. I think it was only central banks and all those large institutions that could trade forex. So there was no accessibility for retail traders like us, like individuals like us, to trade forex. But now we have that opportunity to trade the market and make as much money as we want with the low barrier of entry. Now, the second advantage is better risk management. Now, this is based off of comparison with other financial markets like crypto, um, binary options, if you've heard of that. I think binary options like Olim Trade, IQ option, and stuff like that. So Forex has a better risk management. You can manage your money well, you can manage your capital better than in all those markets. For example, in binary options, if you place a trade of $10, the max you can make on that trade is about $10 or even less. I think like $9 or $8, which in the long run, you're not going to even make any money because you're making less than you're risking. While in Forex, if you risk $10, you stand a chance of even making 20, 30, 40. You can make 10 times the amount you risked, right? You can make 20 times the amount you risk. It all depends on how on your skill level. And then thirdly, high liquidity. It's the largest financial market in the world, so obviously it has high liquidity, right? High uh liquidity. And then you can trade anytime you want. That's the joy of forex trading. You can trade anytime you want, anywhere you want, whenever you want, right? As long as you have access to a laptop, a phone, and stable internet connection, you're good to go. You can trade with only your phone, which if you are anywhere in the world, you can trade with your phone if you have internet access, right? So as long as the internet is available, forex is available, and you can trade anytime. Now let's just recap what we just learned. Forex trading is the exchange of currencies, foreign currencies. It is traded by banks and retail traders, and the advantages is the low barrier for entry, high liquidity, trading anytime you want, and better risk management.